Thanks, Chris. We finished today with a look ahead to innovation. So we're looking at product innovation, and in particular, I guess, tying together some of the strands we've talked about throughout the day in terms of the interaction of the traditional world with the native crypto world. With me today to discuss this is Daniel Kukan, a senior trader at Crypto Finance, and Edd Carlton, institutional digital asset trader at Flow Traders. Daniel, Ed, welcome.
Hi there.
Hi. Ed, I want to kick off with you, Ed. Looking at products in terms of how firms are getting exposure, where do you see the innovation today with regards to product development?
Interesting question. So, I mean, obviously, Flow Traders with a long-standing pedigree in the ETP space, we see a lot of the action there, and there's definitely a lot of innovation and a lot of continued growth in that market, not only by the number of issuers coming to market, but also in terms of the number of products that they're then issuing themselves, whether that's single asset products, or trackers or basket products, capturing a handful of crypto assets. But then at the same time, we're also seeing, I think, increasing innovation and demand for cash settled products. So giving more traditional financial institutions access to the upside of the crypto markets, but with that cash settled element rather than having to worry about physical delivery.
Interesting. Are you seeing that help get more traditional facilitators, intermediators as well, come into the market where they don't have to directly interact with Bitcoin itself?
Well, I think it's a well-known fact that the handling of the physical of crypto asset is kind of one of the barriers to entry, whether that's operational or from a regulatory standpoint. So it's quite a natural progression that if there is enough demand to get exposure to the asset class, then derivatives or other cash settled solutions will naturally permeate to the top. The entities which are facing these barriers the most are those from the traditional world. So whether that's banks or asset managers that simply cannot touch or hold the physical on their balance sheet, then ultimately looking for something, whether it's a CME future or an ISDA-based NDF or TRS, then these are all options which I think are definitely going to get the eyes and focus of some of these institutions.
Interesting. Daniel, where do you see the innovation today in products?
I mean, there is already a lot of products listed by several issuers when it comes to linear products. ETFs are also listed everywhere, I would say. And the next evolvement would definitely be in the derivatives space. I can compare it with back in the 90s, where the first electronic exchange started here in Switzerland. We were trading plain vanilla options, and this evolved then to exotic options in the OTC market. Further, we started to have leverage products, more structured products in terms of yield enhancement, capital protection products, and stuff like this. So there is a long way which we can still go.
In terms of the non-linear options product, how do you see that market evolving? Obviously, you've got options on CME now. You have the likes of Deribit and others offering options. How big is the OTC market compared to that? And also, how do you see that non-linear world evolving?
Yeah, I mean, it's still evolving. It's still in the first steps. I mean, the regulator is still having some hurdles, especially due to capital restrictions, just to satisfy the balance sheet, the whole risk the companies are running. So this is quite a big issue at the moment, but this will definitely get better when more demand will come up and people will ask for several different non-linear products.
Ed, any thoughts on
that? No, I mean, I think definitely. You're asking about the split between OTC and screen, and from what we're seeing, I think it's probably a fair assumption that analysis that there's more getting printed on screen in these options and other derivatives at the moment, and normally as the market matures, you'll see that kind of dynamic swing to more favor the OTC market. The other things which are afoot that, if you look at like open interest of some of the options at the moment, it's not like figures which are going to set the world alight yet. But then I think as this market matures, and I do believe that once we have, say, a catalyst event such as the final approval of a physically backed ETF, for example, in the US, that could definitely be, as I mentioned, the kind of catalyst to drive further adoption of options and give more of a use case for their trading, which would then equate to a higher open interest and volume in the product.
And how about the expansion of coins? And even now we talk about options trading, but it's really Ethereum and Bitcoin. I don't think you can get a Solana option, for example, on a listed market today that I'm aware of. How do you see that evolving? Is that market going to be deep enough in the kind of altcoins to develop anything serious?
I think it's mostly going to be driven by demand, right? So if we maybe take a step away from options and look at the ETP market, which is something we're very familiar with. You look at the last few years, as I mentioned, there's been more issuers and more products coming to market, but they're not just focusing on Bitcoin or Ethereum tracker products. We are seeing products being listed with coins or altcoins, as you put it, coins which are further down the market cap table. And the reason why they're doing that is not just because issuers have a personal love for of a certain coin. It's because there's going to be demand for it, whether that's retail demand to get exposure to these altcoins, but within this structured manner. And also, as I mentioned earlier, basket products where we're seeing issuers bring products to market which capture top 10, top 20 by market cap, which are a bit more fluid in their constituent.
Sure.
I mean, we do already see like the altcoins which are embedded in several DeFi option vaults. So it's already tradable. People invest in there. It's definitely not there where it should be at the moment, but there are several risk takers taking positions on this. The product range is definitely not there where, let's say, a standard option exchange is like Eurex. But it's evolving, and that's the good thing about it.
And brings us nicely onto the DeFi question, Daniel. So people talk a lot about DeFi, but perhaps you could just start with a kind of very brief definition of what it is and where it fits into the ecosystem that we've discussed today, but also just your view on where we are in terms of the build out and the early growth of the concept.
I mean, the growth was tremendous. It started like 1.5 years ago, where people really caught the fire, the interest in it. It's basically a peer-to-peer transaction platform without any intermediaries. So you don't need any regulators. You don't need any custodians. It's just a peer-to-peer transaction-based platform run by smart contracts.
But there's multiple providers, right, that are doing this, multiple areas you can do it.
There is a lot you can do. I mean, I described it before about this option vaults, which are evolving quite heavily. There is still a lot to go. I mean, even if we think about the tokenization, all this can be done in a decentralized way. Maybe to mention is, I mean, people like to call everything decentralized, but you need to really closely look at all the projects. Not everything is decentralized as we understand it. I mean, if there are just a few guys running the show, then we cannot talk about decentralization. So that's it. Yeah. That's an important point to make here.
What are your thoughts on DeFi? How involved are you is Flow in the DeFi world, and how do you see it evolving?
In terms of DeFi, we've identified it as a growth area and definitely one where there is opportunity to be captured. So naturally, we will take a look, and I think it's something where if you start going down that rabbit hole, you can go very, very deep, and there's sometimes specialists for that. You know, looking again at kind of demand-driven stuff, we've seen where some issuers are now been focusing on bringing out you know, decentralized baskets or products which giving that exposure to this growing decentralized market. I think it's always important to remember one thing though, that you know, in terms of how these markets operate and the actors that you are trying to service in this marketplace. I mean, we're a liquidity provider, so you know our job really is to provide liquidity to the market, to provide, you know, a clear, transparent, and fair market wherever possible. Some elements I think of the decentralized market maybe, I'm not going to say don't lend themselves to that, then it doesn't create a clear, transparent, and fair market. But for some people looking to source liquidity, there are certain attributes of a decentralized marketplace will just not conform to the market infrastructure that they're used to operating in. An example would be, you know, by nature there is no centralized body for clearing of a decentralized asset. So in terms of your recourse, often that's then put onto the base 100 codes that someone has written and had audited, which, you know, for many financial institutions, putting all your faith in, you know, in code is just a bit too far to go. So in that sense, you know, you've got to be mindful of how people can access these markets, not just, you know, they are there and it's something that has been built, right? So technically, yes, very interesting, very innovative, a lot of opportunity, but then it's also making sure it's something that has clear accessibility to the wider market.
Interesting. It wouldn't have busted your nickel trades on DeFi though, would it? So maybe there are some benefits to it. But ultimately, who do you see as being the kind of regulator of DeFi? Is it an alien concept to, can you regulate a DeFi market structure?
Oh, I mean, I think to my point, you know, I mentioned kind of auditing of contracts. So I think that the industry is actually pretty good at self-regulating and you know, making sure that from a kind of code standpoint that it holds up. From an AML and KYC perspective, actually there are, you know, the people and actors involved in the space, you know, the likes of Chainalysis and Elliptic, the chaps who provide blockchain forensics, you know, very mindful of this growing space and providing tools which can help wherever possible close the loops and provide some comfort around operating in this space. One of the things I always enjoy about operating in the crypto or the digital space is that this is wonderful collaboration between technology, finance, and so you kind of get anything that, if there is a gap that needs to be filled, it generally gets filled. So if there's a need for kind of a compliance or governance, it will generally get built, and it's at a higher pace than you normally would find in a traditional market.
Daniel, any final thoughts on that before we move on to look at the technology itself?
Yeah, I mean, there are already some protocols or providers who basically rule the whole DeFi space in a private manner, meaning that the institutionals which need to be regulated, that they basically trade within their circle. Then the question comes up: is it neutral again? Most probably not. So, but this is something which is already ongoing. So people are looking for ways to get it done.
Well, one of the things we talked a lot about today on the other panels is the opportunity that native technology providers are bringing to the market. But there's a huge gap between the technology that they're able to build and the implementation within a heavily regulated market infrastructure. Ed, what challenges do you see native crypto providers having when it comes to applying this jazzy idea to a bank, for example?
I think, I mean, because, you know, native technology providers or crypto providers is quite a wide term, but I think, you know, to maybe make it a bit more specific, if you're coming as a new actor in this space and a technology provider, you may not have had the years of experience of operating in, say, the traditional market infrastructure. And whilst this is, you know, a market which is a lot of exciting things happening, very fast paced, a lot of growth, and a lot of technological ability, i.e. the ability to do something, that doesn't necessarily equate to ability to actually monetize that. And you know, from the traditional markets, they operate in a pretty set forward manner and have been doing so for decades. And to bring a disruptive technology to that market, yes, you know, that you can come to the table and say, look, we've got this new thing, it's really disruptive, it can solve all the problems. But if it isn't something that is too kind of revolutionary rather than evolutionary, I think that's probably one of the biggest elements which is often overlooked. So having an understanding of how the traditional markets operate, and some of the current kind of market infrastructure setups, I think is pretty important. I'm trying to think of a decent analogy that I can bring. You know, I know one of the problems, or should we say, with the current market is the inefficiency, right, of the movement of capital. There's no current prime broker or centralized clearer, as I've mentioned. So from a technology standpoint, you know, yes, someone could say, well, we don't need that. We can just build a completely decentralized method, and A can talk to B, and we don't need that. However, looking at how the traditional markets operate, and to ensure that we're not doing something that's just kind of completely wiping the slate clean, there needs to be that step between, well, actually, how can we provide a technology-driven service which creates that kind of pre and post trade systematic flow that the market is used to, ultimately allowing the capital flows from kind of the old capital markets into this kind of more nascent crypto market.
Daniel?
Yeah, I have actually no comment to this. I mean, Ed explained it in a nice way.
Yeah, and I guess how does one bridge that divide then? Are there, you know, who's responsible? Not responsible. How do you kind of firms such as flow traders, or even looking to the wider market, how do people become better at understanding how to embed emerging technologies into capital market workflows without taking the risk? And do you think that the regulatory environment needs to expand or adapt in order to allow more innovation in traditional markets?
Yeah, I do believe in it. I mean, I really believe in a global decentralized derivatives market, maybe in 5 to 8, 10 years. And why do I believe in it? I just think people have changed the last years. We see it on the political landscape as well. And what people look for is an open platform, meaning everyone can access it. People are looking for a public platform, for a neutral one. It should be censorship resistant, and it should be borderless. So this is definitely going to happen in about 5 to 10 years.
Interesting. And I guess related to that, how therefore do the traditional institutions, let's look at the exchange world, how do the exchanges such as Eurex adapt and develop their services in order to be relevant and at the forefront of this revolution or evolution, let's say?
Yeah, I mean, we have seen it. Deutsche Börse has taken a huge stake in our company, so they don't want to miss any upcoming. So they do invest like this.
Yeah, but how do you just said you think the future's DeFi? You're part owned by Deutsche Börse. How does that kind of transition happen, and what part does the traditional world play in the transition?
I think it plays a big part. I mean, we learned everything from the traditional world, and now we need to transform it into the new world. So not everything is lost. I mean, it's not everything is new, but it's just more dynamic. It's maybe not more robust at the moment, but this will definitely come as well. I don't know, Ed, what do you think about this?
Yeah, I mean, I think kind of edging back on a few comments I made earlier, I mean, you can almost have there's two sort of horses running in the race, and you don't necessarily have to say that they are exclusive horses. You know, on one side, you know, you do have this very cutting edge technology. You know, you have distributed ledgers, you have blockchains, which enabled us to create arguably a much more efficient marketplace, which is fantastic. But I'd have to say that you have to also have a healthy dose of reality every morning when you wake up. And, you know, it's not necessarily, you know, realistic to assume that just because we can have decentralized exchanges in the next 12 months, you know, we're going to have a complete overhaul of Eurex and all the other global exchanges, and they're all going to move to this new decentralized model without CCP clearing and et cetera, et cetera. So on one hand, yes, you know, there will be a part of the market will try and push forwards and be innovative and maybe a bit more revolutionary. At the same time, I think there's going to be the existing market infrastructure, which, kind of to hint at what Daniel was saying, will just look at ways in which they can improve, so that evolution rather than revolution, where they can take aspects of this new technology, whether that's, you know, utilizing blockchains to hold ledger records and move, you know, from depositories the information around, whether it's putting the assets onto blockchain. So, you know, traditional assets, put them on a blockchain so they can be fractionalized and maybe traded on a more liquid fashion 24/7, as opposed to constructs of existing markets. Who knows? I think that, you know, one of the main things is that there are, you know, over the last, you know, at least 5-6 years that I've been kind of in the market professionally, huge amounts of growth, a huge influx of capital, and what I'd say grey matter, so very, you know, intelligent people in this space. And so, you know, I wouldn't be beholden on how far this innovation could go over the next few years.
I mean, yeah, I started in the 90s trading electronical platforms like derivatives, and for me it's like a deja vu. You know, as I said in the beginning, it's just started with plain vanilla options, and then it evolved dramatically. And if we look at the structured product space right now, especially in Europe, I mean, there are like 200,000 products listed on several exchanges. So it's a massive field which people are really looking into it, and it's also a nice field for all the relationship managers to offer several products to their clients.
Absolutely. And I guess looking ahead on the few minutes we have left in terms of the future market, 5-10 years, maybe further beyond, where is all this going? What does market structure look like? What does the derivatives market look like in 2080, whatever we might look out to?
Do you want to hit this one first, Daniel?
Yeah, I mean, I already mentioned it. For me, it's going to definitely be in a decentralized way. The traditional market venues will need to adapt. I mean, this happened as well with all these multilateral trading facilities coming up in the UK. You know, with Chi-X, Turquoise. It's just people try to find other ways just to trade cheaper, to trade faster, to trade maybe more secure. For me, the decentralized version is basically the best version.
And probably my comments are a bit more subdued or conservative, shall we say. I think, you know, I'll stick to my guns on that. You can have two horses running in the race, and I definitely think you will see you know, huge progresses forward. I will still, however, think that, you know, in at least kind of 5 years' time, I wouldn't be a buyer that would have a complete overhaul of the financial market system to the extent that we no longer have, you know, centralized bodies, you know, clearing and the existing kind of exchange and derivatives structure that we have, the use of FCMs and prime brokers. I still think that they will be around. Do I think that DLT, distributed ledger technologies and blockchain plays a greater part of that? Yes. Do I think that, you know, we will have derivatives which, you know, the underlying will be DeFi tokens or altcoins or you know, both, etc.? of course, but I don't think that it will be kind of a one or the other type scenario for at least kind of the next 5 years.
Interesting. And Daniel, on an earlier panel, Thomas from Jane Street, when we talked about potential disintermediation of the sell side, said it's a nice idea, but the balance sheet is ultimately what the sell side provides. In a DeFi world, where do you get that leverage from? Where do you get the balance sheet from? Or are we just looking at significantly less leverage in the market?
You will get it from the liquidity pools. I mean, the bigger the liquidity pool, basically the better for any user. So people get rewarded by pumping in liquidity, and that's what's happening basically all over the place. I mean, protocols get famous. They get a lot of liquidity. Rewards are nice. Suddenly, liquidity gets pulled out again. Rewards shrink. So this is a little bit the unstable situation I explained before. But once people decide on one liquidity pool, liquidity will come automatically.
Ed, any final thoughts? We have about a minute left. Any final thoughts before we close up?
I mean, on that topic, or just
just generally overall? Yeah.
No, look, I mean, I'm just probably going to reiterate what I said. That, you know, this market is fascinating, and what we are, you know, whilst neither I think any of us on this call will have certainty of exactly where we will be in 5 years' time, but what we can be certain about, that we won't have stood still, and there will be great innovation. And I think we are only starting to see that really that the wheel's starting to move here. You know, I feel very lucky to be at a shop like Flow Traders, where we've got quite a good breadth of our offering across the kind of traditional side, and also what's going on in this newer world. And you know, very much looking forward to see where I am, if I'm around doing these sort of webinars in 5 years' time, where I'll be eating my words or not.
Interesting, yeah. Doing on a DeFi platform, perhaps. Fantastic. Well, Daniel, Ed, thank you ever so much for your time. And that brings the panel to a close. Thank you very much. Thank you.